Hey guys, can you guys see me and hear me okay? You can type it in the box and let me know you can hear me and see me okay. Looks like about a dozen of you in here so far. And we'll get started about 9 o'clock. Can you guys see and hear me? Okay. Okay. All right. Thanks, Richard. Hey, David, how are you doing? All right. Great, guys. Well, I'm not going to have the camera on me very long, but just while we're kind of getting warmed up here and getting prepped. Cool, cool, cool. All right. Well, hopefully, my attempt to do this at a time where it's convenient for more people than not is working out. West Coast people may be a little more accommodative than doing it, say, at 2 o'clock in the afternoon on Eastern time. So, but you never can really catch everybody at the same time because everybody's schedules are different. But anyways, if you can't, if the people that can't come live will be able to watch the replay and email me any questions they have, as well as you guys that are here live. So, but anyways, some really, really cool stuff, guys, that I've discovered even today, even just today, that I've kind of unearthed about these election trades, so I'll be sharing that here on the class. Anybody else eat these little orange things you get from the grocery store? These things are amazing. They're like little clementines or something. I forget what they call them, but cuties. They're called cuties. These things are amazing. So yeah. So I've been working my tail off to get this class put together and try to get as many people as I can to be a part of it. Quite honestly, I was a little surprised more people didn't want to, because I didn't fill up all the seats. I didn't fill up 250. And so I was just like, well, whatever. I guess I didn't do a good job of communicating the magnitude of the opportunity here, but you guys that are here caught on to it. So I'm going to try to make it pay off for you guys, pay off big time. And of course, I can't control what happens in the market, but I can base my trades off of what is likely to happen based on past data, right? So that's what we're going to go over tonight in those setups. And I'll be putting a good chunk of my own cashola to work in these trades, especially on the GLD trade. I'm really excited about that one. So you guys want to see my dog? Ready? Say hi. He doesn't have much personality. But he's a shelter pet. We got him from the shelter. Yes, exactly. Frank says if the class works, if the trades work, more people will come. Yes, I tends to work out like that. You'd be surprised though. You really do have to spend a lot of money in advertising to get people's attention nowadays. Unfortunately, for me. But hey, it is what it is. It's competitive out there, I remember when I first got started with my business to advertise on Google AdWords, it was like I was getting clicks for like 20 cents a click or less. And even before 2010, those clicks in some cases had went up to multiple dollars per click. Like just to get someone to come to my website if it's a paid ad. Yeah, so it's pretty crazy. But anyways, you guys have found what you need to find, in my opinion, anyways. And so I wouldn't have put this class together if I thought it was a bunch of hooey. And I really do want you guys to, consider this time and monetary investment something that is worth it and that paid dividends for you. So yeah, just a little bit of banter here, I guess, before we get started. Yeah, the dog is sleepy. I'm guessing he's about 10 years old right now. You never can tell. You don't really know how old a shelter pet is, But yeah, about this time of night, he's wanting to go in the bedroom. He sleeps under our bed. And okay, give me just 1 second. Okay, so get out of here. All right. All right, we still got 8 minutes to go. And there's 18 of you. Okay, great. Pretty good turnout for the class. I'm going to be going through different tabs in my browser, so the class is not going to be like when you guys maybe saw the webinar that convinced you to sign up for the class. It was a slide deck that was in PowerPoint or a Keynote. And so this will be different. The class will be different. I'll be going different tabs in my browser and just kind of explaining and answering questions as I go. So feel free to interrupt me with any kind of question you might have in the comment box. And once I see it, I'll answer it right away. Unless I'm in the middle of some elaborate thought that I can't allow myself to pause on, so I don't forget. But yeah, so I'll just kind of impromptu answer your questions, and we'll go from there. So yeah, so one of the things I tend to do sometimes is just kind of skip over things that I assume everyone knows. So don't feel like you're asked. If you have a question, go ahead and ask it. If I'm talking about strangles and there's something that I go over that, or I just kind of gloss over something and I leave something out, just let me know that, hey, I don't understand how you got to that point, and I'll explain it to you how you would place that trade, or whatever it is about the trade that's not being explained that you need explained, I will explain it. All right. Should this be able to expand to full screen? I do not know, because I'm running this from like the administrator. You know what I mean? I don't know, because I can't. I haven't tried watching one of my webinars like as in viewer mode. I don't know how to do that yet, but I think you probably should be able to do this full screen. It would work. It works better on laptops and desktops than it does on tablets and phones. Just so you guys know. Let me type that out in case there's some people that best on laptops and desktops, not so much on tablets and or smartphones. All right, if anybody's been able to full screen, could you drop some helpful tips in the chat box for us? That'd be awesome. If not, I guess the only way maybe to make it bigger would just to be make your browser, like drag the corner of your browser window and make that bigger, and that may help a little bit. All right, 4 minutes to go. All right, who here? Is anybody here tonight that doesn't have the ability to? Is there anybody here that doesn't have the ability to trade options in your account? There's still trades you can take based on this stuff, but I'm just curious because, you know. Yes, it's live on YouTube, but it's an unlisted link, so it's not like anybody on YouTube can just go find it and watch it for free. So I hope that makes sense. So only you guys have the link to this video. Even though it's on YouTube, it doesn't mean it's free to the whole world. And then I embed the live YouTube video inside of my actual like webinar thingy. Like my grandfather used to say, the doohickey, my webinar doohickey. All right. So yeah, don't worry, man. You guys are the only ones that can see this. All right. So we're coming up on 2 minutes, and so I guess everybody can trade options. That's great. Because I really hope we're gonna knock it out the park on this on a gold trade. Maybe SPY too. SPY's been so volatile. I might even strangle that one too. But with the volatility in the markets, it's just setting up for a perfect kind of reaction. I think basically what's going to happen is, you know, market's going to go up and gold's going to go down, but I'm going to, you know, play it so where if I'm wrong, I'm still right, you know, still make money. Or a lash up per all-time engineers. Okay, Frederick. Yeah, kind of mixture of two different technologies here. The YouTube and the webinar, you know, structure, housing, whatever you want to call it, your browser window that the YouTube video is embedded into. All right, so it's 9 o'clock, guys. Let's go ahead and get rolling into the class. First of all, I want to say with all sincerity, thank you for, you know, reserving and purchasing a seat to this class. I'll work as hard as I can to make sure that not only, you know, to the best of my ability to see that we get some profitable trade setups here, but also make it a fun experience for you. Of course, the number one goal here is to make this profitable for everybody, obviously. But I also want it to be fun where, you know, you guys like enjoy working with me, you know. And you know, I know we're, you know, trading guys, we can be kind of boring people, right? So I'm gonna try to make it a little bit fun for you guys. So anyways, let's go ahead and get right into it. I'm gonna switch my screen to my browser application window. And all right. Cool. All right. So now you guys should see and hear me. But you're not actually, you don't see me anymore. But what you should see is my browser, right? And I don't know why it just got so dang big. I'm gonna make it a little smaller. And so what we're looking at, guys, is the first big trade, of course, that I've been talking about quite a bit now, is the GLD trade. Okay. Everybody's still good as far as you can. Okay, everybody's good. Okay, cool. All right, so sorry about that. All right, so gold is the big trade out there, guys. So what's happening with gold? Gold kind of sprung out of this kind of languishing, just drip, drip, drip downtrend a couple weeks ago on October 11th. Had that nice up day, and it's been kind of drifting higher ever since. Last couple days, it's pulled back down to the 20-day exponential moving average. Or so, just about there, anyways. And so the question is, how's it going to react to the election? The question is, how's it going to react when the results come in that next morning and the day after that? Well, I can take a guess, but the best way to trade this, and perhaps even the SPY, but for right now, I'm going to stick with just doing the GLD for a strangle trade. That's subject to change. We'll talk about, but we will address the SPY though tonight before it's all said and done. Okay, but let me just kind of go over how it is that we're going to trade this, and that's going to be something that's called a strangle. So it's going to be I'm going long a strangle for GLD, the ETF. So the way I would go about that is I would log into my account. I've got two accounts. Excuse me. I've got two accounts. I've got one with E-Trade and I've got one with Interactive Brokers. So what I did today is I took a couple screenshots from my accounts that will walk you through the prompts of how you place these trades. All right. So check this out. If I want to place this trade for GLD, say, oh, and by the way, we're probably going to place this trade. I'm going to place it at about between 2 and 3:30 p.m. on election day. So a week from today, I'm not going to place it on Monday. I'm not going to place it on Tuesday morning. I'm going to place it on Tuesday afternoon. The reason being is because I'll get it cheaper. Okay, the options will have a little bit of decay factored in by then, and I won't have to pay quite as much, which is important to making the trade as big of a winner as possible. All right. So firstly, if I'm looking at E-Trade, I'm going to log into my account. All right. Now, let me zoom in here. Once I'm logged into my E-Trade account, guys, what I can do is go to trading right here, or this, you literally just hover your mouse over that word. And then I'll go down here and I'll mouse over where it says options and I'll click on that. Okay. So if you have E-Trade, this is what you'll do too. You'll log in, you'll go to portfolio. Well, actually, you don't even have to go to portfolios because this is up top, no matter where you're at in your account. But I have mine set to go to portfolio as soon as I log in. So I go to trading, I go to options, I click on options, right? Well, then what I'll do is I'll go to the next page and I'll type in GLD as the symbol, okay? Now, when I type in GLD, it'll automatically recognize what I'm trying to trade, and then it'll populate this area over here where the bid and asks are for the options chain. All right. Now, don't look at that though, at least not yet, because I want you to come back over here and underneath the gold symbol or the gold ticker, GLD, it says select a strategy. So what I did there is I used the drop down box right here. I clicked on that and I went all the way down till I found Strangle and I clicked on it. Now, when I got GLD populated and then I used the drop down box underneath of it to select Strangle, okay, then I went underneath of that and I look and I see what strikes are being pre-populated for me. Because what E-Trade is going to do is it's going to pre-populate what it thinks makes the most sense based on the strategy that you chose. Now, that doesn't mean always that it's the best. As an example, at the exact moment that I took this screenshot today, gold was trading at 115.86. So the strike prices for the GLD ETF are always going to be in 50-cent increments. So I want to, for my Strangle, it consists of calls and puts, okay? That's how it works. We make money if it goes up or down substantially enough to offset the loss on the losing leg, okay? So if it goes down a lot, we make enough money on the puts to compensate for the loss on the calls and then some, right? And vice versa for calls. Or for puts, if it goes up, the gains we make on the calls will offset the loss on the puts and then some, okay? So anyways, what I'm looking at here is a situation where gold is not optimally priced to enter this Strangle. So I want to only get in when gold is, say, priced around, let's just say it somehow, weirdly enough, oddly enough, gold is priced, GLD ETF's priced the same way it is this coming Tuesday as it was today. So you wake up Tuesday, election day, the market opens, the thing's trading at 115.86. And it comes time for lunchtime. Okay, I need to place this trade. This is what Matt said to do, da-da-da-da. Okay, well, what you want to try to do is wait a little while longer to where this thing gets to where it's maybe 115.75-ish, okay? Because what's going to happen then is the calls and the puts are going to be similarly priced. You see how the calls here are 93 cents, the ask is 93, and the puts are, the ask on the puts is 73? That's a pretty big disparity there. So usually when I buy a Strangle, I want the calls and the puts to be, very, very, very close. I want to pay very, very, similar prices, if not identical. I usually can't get identical prices, but I would like it to be something like, instead of 93 for calls and 73 cents for puts, I would much rather pay 85 cents for calls and 83 cents for puts, So I hope that makes sense, because you want there to be an equilibrium there, because you're basically neutral until that catalyst plays out, and the catalyst is the election. Okay, so this gives you an equal chance of the trade working out regardless of which way it goes, as long as it goes up or down substantially. Does that make sense so far? Everybody good so far? All right, I'll give you like 10 seconds to type in a question, then I'll go back to the other screen. And I won't be able to see your questions till I come back to this one. Okay, Mike says yes. Frederick says yes. Cool. Okay, all right, so I'll come back to look at questions here in a few more minutes. So let me keep moving on. So again, we went to the login, we went to trading options, and then we typed in GLD, selected Strangle from the drop down box, and it pre-populated what it thought made the most sense. But again, you want to wait until the ETF is optimally priced. You might say, "Oh, Matt, what the heck happened? Are we screwed if it does?" Just kind of trust me, guys. From 2 o'clock until the close, so those last 2 hours, there will be a few times, at least 3, 4, 5 times, when the ETF is priced at an area where it gives you good pricing for a Strangle. Okay, so you just have to play it where it's at. Okay, that's it. I mean, that's why I can't tell you what strike to buy right now a week prior to, because I have no idea. GLD might be at 116, it might be at 125. So it would make no sense to buy a strangle on GLD if it's trading at 125. At 116 and 115, 116 calls and 115 puts. There would be no way that would be smart. Right? That would not work. Okay. So anyways, so let's go to Interactive Brokers. I don't know if any of you are in Interactive Brokers or not, but here's how you do it with them. So you go to Order Management tab. The first thing you do is you click, let me make this bigger. So you click on New Order right here, okay, up in the upper left-hand corner under Order Management. And the second thing you do is you click on Spread right here, this tab right here, okay. Then the third thing you do is you go to Underlying Symbol, you type in GLD, you press Go, and then the computer is going to know what you're trying to trade or options on. And then you'll go another kind of, I guess you could call that a drop-down box. I don't really know. But some kind of box that you click on that gives you a bunch of options, kind of up arrow too. But anyways, you click on that box, and then you go to, you find what? Strangle, right? So you click on Strangle. And and then Interactive Brokers is going to do the same thing that E-Trade's going to do. It's going to pre-populate an order screen of what it thinks makes the most sense for a strangle. Now, I'll warn you, Interactive Brokers can be quite quirky. So, as an example, if I look at this and I say, okay, Interactive Brokers, you got the wrong strike selected. So if I change the call strike right here, I say, no, I want the 116.50. Say I wanted to do 116.50 calls and the 115.50 puts. After I selected the 116.50 calls, it would automatically change the puts to 116s. So you got to be careful. So then you would have to leave this at 116.50 puts if that's what you want. And then you have to change this back to 115.50 puts, right? So it's kind of quirky. So if you're your first time using Interactive Brokers to place an options trade, that's what you need to be warned about. All right. And then you want to pick your order type. I believe you have to use a limit order on a strangle in an Interactive Brokers, so no big deal. Just if you want to get in quick, just look at what the asking price is and pay it. All right. So you can see that the total cost for one of these strangles earlier today, anyways. Again, this was not optimal pricing, right, guys? We want to pay around the same price for the calls as we do the puts. All right, it's very important. And what you can see is basically this would have costed us $1.67 per strangle, right? Or $167 cash. All right. So you do the multiplication there. However many strangles you want to buy, you have to have a X amount of buying power. So this is going to be different for everybody. How much money you use on these trades. According to your own, financial situation, how much you can afford to risk. Of course, there is the risk. This could, it's an options trade. We're going long. It's a long options. There's no short leg. This isn't butterfly. This isn't a credit spread, right? So, we're going long. If we don't get a big move, guys, then this trade won't work. That's just the way it is. I mean, I can't make it work. If I could, I legally I would. But it's so I just want to let you know that that has to happen. But the good news is every single election, there's since 2006, as far back as I looked, there's been a huge reaction in GLD. So any questions on how to use Interactive Brokers, place a strangle on GLD and Interactive Brokers? Okay, so Gary said, should both sides use the same or about the same strike? All right, so good question. what you want to do is you want to look at where GLD is trading. So if you look at today, it closed the day at 115.80. All right, so it closed the day at 115.80. So that's not ideal pricing. I like to look at the 1 hour chart for some reason. I just kind of like looking at it for swing trading purposes, I suppose. But here, looking at the 1 hour chart, you can see, you know, it closed right at 115.80, which, you know, you're going to end up paying a little more for the calls in this case. Let me explain. So if it's trading at around 115.75, I want to go for the 116. I want to go for the calls that are just out of the money and the puts that are just out of the money. All right. So now if it was up here at 116.50, if it's trading up there next Tuesday, if it just kind of jiggles along sideways and it ends up being right here next Tuesday, then I want to go for the 117 calls and the 116 puts. All right. So what I want to do is I want to look at, you know, wait for it to be at a number, trading at a number where the calls and the puts are going to be similarly priced. And I want to go to the calls that are just out of the money and the puts that are just out of the money. The first strikes out of the money. All right. I guess you could go 2 strikes out of the money. That would be, you know, bigger risk, a bigger reward type thing. But I mean, you're still going to get a huge move just going 1 strike out of the money, because we're using short dated options. That's another thing I need to talk about too, is we're going to use the options that expire at the end of next week. So these things don't have a lot of time value on them. That's what makes it so explosive, because the price of the ETF has a good chance of moving a lot, which, you know, will drive, you know, be a driver of options prices. Okay. All right. So did that answer your question? Now, the alternative to that, Gary, would be you could use a straddle. Some people think the straddles are easier or a little simpler. I guess they are. So the way you would use a straddle is with GLD over here at 115.75. You would only want to place a straddle if it's trading it's trading right around the price of the strike of the straddle. As an example, if it trades up here at 116 on Tuesday, and you say, well, I don't know, Matt was talking about strangles, but, you know, I'm not sure what strikes to get and this, that, and the straddle just seems easier to me. That's fine, and the trade will probably still work if we get a good move one way or the other. Okay, so what you could do as an alternative to a strangle, guys, is you could just get a 116 strike straddle. So that would get you the 116 calls and the 116 puts. But you only want to do that if it's trading right around 116. So say if it's trading at 116.04 or 115.98 or something like that, right? So that's the kind of scenario that you're looking for with the straddle. You only want to buy that straddle when it's trading right around that strike price that you're buying the straddle at. Or if it's down here at 115.50, I want a 115.50 straddle if it's trading at, say, 115.49 or 115.52, you know. Once it starts going up into this, you know, about 10 cents above or below your strike, it kind of just skews your the prices that you're going to be paying for the calls and puts, and kind of makes it harder for the trade to work, depending on which way it ends up going the day after election day and the day after that. All right. Awesome. Okay, I'm glad you asked that, and I'm glad I talked about straddles. Now, straddles, guys, are actually a little easier, but I wanted to talk about strangles because I kind of prefer them because they're a little cheaper, and you can, when you get the big moves, you can make a little bit more because you're buying options that are out of the money. All right. Okay, so always check your prices of your options before you execute that order. Check the price of the ETF before you place the order. You don't want to come in a situation on election night where you bought a strangle on GLD and you ended up paying way more for the calls than you did the puts, and then GLD tanks the next day and you have a hard time breaking even because you paid so much for the calls. All right, so you don't want a scenario like that. I say from 2 p.m. beyond is when you want to look at this trade being placed on election day. But, anything after, say, 12 o'clock noon Eastern time should be okay. All right. But me being me, I'm going to try to wait as long as I can because I just don't want to pay extra. Right. And then there's so many variables, right? So there's also the variable of something happening like this, where this is the 1 hour chart of GLD. So something happens like this, where see this nice big candle right here, this hourly candle where it topped out. So something happens along the lines of it makes a big move like this at noon, and then at 1 p.m. it fades, and it fades at 2, and it fades at 3, all the way into the close. And then you bought a straddle up here at 117.50, let's say, but the thing closed at 116.75. So now you got a big profit on your puts, and you're at a loss on the calls, but it kind of messes you up for being positioned for the overnight move. You're kind of not neutral anymore. You're kind of then at that point you're rooting for it to keep going down, right? So you got to be real careful. And there's been cases like that where I placed my strangle or straddle earlier in the day, and then I've got a big move before the close. And what I'll do sometimes is I'll close that strangle out for a profit before the closing bell, and then open up a new one, like say 3:30, 3:45 Eastern time, just before the market closes. Right, so there's some nuances here, and so this is why I'm doing the class, to go over all this stuff with you guys with a fine-tooth comb, so you guys understand all that's involved, or most of what comes to my stream of consciousness here to explain, anyways. So I hope that doesn't seem overwhelming or anything, but it's just the reality of trading options. What is the most you can lose with the trade? So if I place a trade, say I just want to do one contract like this, a strangle, GLD, and say we know this is not good pricing, right, guys? We don't want this. We want to pay the same, just about the same way as we do for the calls. But let's just say we do this, okay? We do this trade here. We pay $1.67 for a strangle contract. If GLD opens up the next day, or unchanged, this strangle is going to lose a significant amount of value, because there is a little bit of premium being priced in from the election, not as much as like say a stock before earnings, and that relatively speaking, that's why in part why I like these trades so much, because the market makers don't price them up like they do stock options before earnings, like Facebook options before earnings tonight were super expensive. Well, that's one of the things that makes this attractive. But let's just say that we did that, and it didn't really have much of a move. Well, then this thing's you're gonna take a haircut on this, if you hold on to it, and I'll just be very straightforward with you, if it does absolutely nothing, it'll go to zero, right? Because what we're doing is we're leveraging up for a big move one way or the other. If we don't get that, then you're looking at a loss. You're looking at all the premium value basically going out the window. So that's the idea of getting in the trade late on Tuesday and then getting out, say, by sometime Wednesday or Thursday at the latest. Now, with that said, there's a really cool development that I discovered that I want to share with you guys next. All right. Oh, and then this is what it looks like. When you close them out, so you guys, I just showed you how you place a strangle or a straddle all in one order, so you don't have to pay commission fees for 2 trades, which is nice, right? So, but however, there's at least through the brokers that I use, there's no way to close out your trades, your strangles and straddles in one fell swoop. You have to close the calls and the puts out individually. Okay. Now, with that said, the calls or the puts might end up being worthless right away, anyways, if we get a huge move overnight, which won't be a big deal because we'll make so much money on the winning leg, anyways. But just to let you know, you have to close. You can enter in the strangle or straddle in one order, but when you sell, it's 2 separate orders. Okay, hope that makes sense. All right, so now let's talk a little bit about what I think is going to happen with GLD, and then we'll move on to some other trades. All right. Yes. Okay, some more questions. How can you do a trade at 2 a.m. the market? So what I meant is at 2 p.m. Eastern on election day. Yes, we're placing the trades on election day. Most likely we'll close them the day after that or the day after that. So most likely close them Wednesday, at the latest be Thursday. But let me show you. Let me show you guys something that I think is going to like really get you guys excited. And will it play out like this again? I don't know, but I'm pretty sure nobody else has caught on to this, so I'm excited to be able to share what I found with you guys. So check this out, guys. Look at the 2006 midterm. All right, you guys see this? Let me make this bigger. All right, you guys see this right here, where my crosshairs are? You see that down candle right there? Well, let me just make sure I'm telling you right. Okay, November 2006 midterm election. Let me get the date. All right, it was on November 7th, right? Okay, so it was on November 7th. It was on November 7th, 2006. That's where my crosshairs are on the candlestick that happened to be printed the day after election day. So you guys see that big drop right there? It went from 63, or wait, let's see, what is that? 62-ish, maybe 62.50-ish, 62.25, something like that, all the way down to 60.87 the next day. That's a pretty big drop. Typically, you need about a 1% move in GLD to make a strangle work, from my observations. All right, so that's a big move down. That's enough to where if in 2006 I was aware of this phenomenon and I was trading options based off of it, which I wasn't, but if I was aware of this, I could have took this trade and I would have been in the profit. I would have had a nice big profit on the puts. Now, with that said, I would have been in a big loss with the calls, right? But look what happened the day after that. Look at that bounce off the lows of 60.87. The next day it gapped up even above the way above that whole body of the candle when it went down the day after election day. 2 days after the midterms, 2006, it gapped up and ran all the way to 63 and change. So guess what? A strangle played on November 2006 midterm election, profit on the puts the day after, profit on the calls 2 days after. All right. Okay, so one time maybe that's an anomaly, right? So let me go to the next one. So this is 2008. Another thing here, this is let me just make sure I'm telling you right about the November 2008 election date. All right, it was November 4th, right? November 4th. Okay, so this is the election here. Right here, you had a reaction. You had a gap up and run on election day. All right, so that was, you could have made money if you placed a strangle there before election day, but that's a crapshoot, so we're not going to do that. So we're going to, a strangle here would have made money on the puts the day after election day. A few days later, it bounced, but this wasn't a midterm. So I just wanted to show you that there still was a big reaction. Now, the next election after 2008 was what? 2010. Now, look at this. Check this out, guys. Check this out. All right. So you see where I have it circled right here. Okay, now look at what happened. This is the day after election day right here. All right. You see how it gapped down a little bit and then really whooshed lower all the way down to 129.48. That's a huge move from 133 to 129.48. I can guarantee you that puts from a strangle with expiration and that was dated that week were in the money big time. But look what happened the day after. From the lows from 129.48 all the way to, what is that, 134s, and then it zoomed higher into the 135s by the end of the day. You're talking about some huge swings. That's a huge boomerang, because it started off, okay, day after election day, little gap down, and then whoosh lower, and then boomerangs back to the upside, right? So that's 2006 and 2010 are both boomerang reactions, down the day after the election, up 2 days after the election, all right? Both midterms. 2012, is this 2012 right here? No, that's 2014. I want to go to 2012 first. All right, 2012. All right, I don't want to tell you guys wrong, so. Election date. It was November 6th. All right, so that's election day, November 6, 2012. All right, so you had a gap up, it faded lower, and then regained strength. And so that one probably would have took about two days to be in profit on the calls. That one was probably a little bit tougher of a trade to make work. Okay, but I'm guessing those calls probably ended up in profit and making the strangle profitable overall. But guess what? That was a presidential election. That was not a midterm. 2014 was the last midterm election we had. And guess what happened? All right, let's look at the 2014 election date. They were held on Tuesday, November 4th, 2014. All right. So this crosshair is on the 5th of November. So that's the day after the election. You guys see that big drop? Look, it went from 112.50 all the way down to 109. Huge, huge, huge gap down. All right. Over probably a 2% gap down. All right. And then the next day, opened up unchanged, tried to move up a little bit, but ended up basically changing unchanged, or closing unchanged. But 3 days after the election, so you got the whoosh lower, unchanged the next day, and then another day after that. So this is election day Tuesday, Wednesday, Thursday. That Friday, you had a huge move up. So again, that's 3 midterm elections where the puts are in profit 1 day after elections. And then in 2 cases, the calls were in huge profit the second day after the election. And in 2014, it took an extra day, right? So the 3 most recent midterm elections have all had boomerang reactions in gold. Is that cool or what? Now, does that mean it's going to happen again? No, but it's pretty interesting, right? I mean, midterm elections only happen every 4 years. So pretty neat stuff. Now, does that mean we should get cocky and just play puts on election night? No, I don't think so. Because maybe it's a reverse boom. Maybe it's a reverse boomerang this time around, and maybe GLD goes up day after elections, hovers up there, and then a day or two later wants to drop back down. So maybe a boomerang, instead of boomeranging like this down up, maybe a boomerang's up down. So what I have to do is position myself where I'm going to profit from a big move either way, where I'm not going to get, I'm not going to try to be too cocky and just play puts on election night and then load up on calls, right? The gambler inside of us wants to do that, right? But that's not the smart way to trade it, in my opinion. All right. Okay, so Gary's question is: should we try to hold the should we try to hold the trade for several days? So what we're going to do is take a profit on the initial move. So the day after election day, I'm aiming for a big move one way or the other. I will sell that leg that's in profit. Okay, most likely it'll be a big loss on the other leg, and then I will hold, even though probably still have a bid to it. So, but it'll be a big loss on the losing leg. I will continue to hold that losing leg until say the end of the week, looking for that boomerang effect, and maybe even double down on them on those calls or puts, whichever they are, waiting for that boomerang effect, right? So pretty exciting stuff, if you ask me. Does everybody see how that works with the boomerang effect? Any questions on that? All right. Okay, great. So we're playing for the boomerang, guys. I mean, overall, we're just playing for a big reaction one way or the other, but I just think it would be, that would go down in the, as the best trade of the year if we can, make huge money on both legs of a strangle. Usually doesn't work out like that, even when they work out well. All right. Okay, cool. Now moving on. We talked about GLD stuff. Looking over my notes here. So here's Kramer talking about. I copied a paste, or I wrote down a quote I heard him say on CNBC. I do believe midterm elections are causing havoc in stocks. So this is what stocks are reacting to. Now, I did research and backtest the SPY ETF on election results, and it's not near as good as a reaction as gold. But that doesn't mean I won't play it. Maybe say if I do 20 contracts of a GLD strangle, I might do, a smaller amount of SPY strangles just to play it. If it still is reacting, it's going to have to be continuing to trade in a volatile fashion like it is right now for me to be interested. But the trade, at least according to recent history, is in GLD. Okay. All right, so let's talk about some other stocks that are in focus. First one I want to talk about, and I'll kind of have to go through these fairly quickly because there's a lot. So First Solar, you can see here a nice bounce today on the 60-minute chart. Solar stock, and we all know that that solar stocks have a hard time. Well, they seem to always have a hard time, I guess. But these solar companies need subsidies from the government, and Democrat-ran governments seem to be more favorable to give them money. Okay, so I would say a blue House of Representatives is a positive for First Solar. Is it going to gap up that next day after the election? I don't think you'll see a strong enough move to play it, but it'll be something where we might be able to get in a trade post-election, right? Because it might have some runway. It might open up unchanged the next day, and then trend higher. So it'd be a play for some for shares or maybe call options going out to say December or January or something like that. You can hold for a little while for a swing trade. All right. Any questions on First Solar? Yes, Frederick says so. You essentially have the free roll on the losing leg. That's a very good way to put it. Jurgen says, "Hi Matt, how fast do we have to react to your email for exiting?" Yeah, I mean it depends, on what the market's doing, but hopefully you'll have plenty of time before, if it's a huge gap up. Hopefully you'll have plenty of time before, say, it reverses lower or something. But I don't know. Usually people don't have too much of a problem. All right, so that's First Solar. That's the deal with First Solar. That's in play. Also, BTU. BTU is a coal stock. So if Democrats love solar, they hate coal. So BTU is in a little bit of danger from a democratically ran Congress. Any kind of climate change things, if they're able to, which I highly doubt, the president would sign that stuff into law. But, generally speaking, it's bad for coal companies. Not something to play before the election, but something to consider afterwards. If I see a trade, I'll let you know. I'll talk about Fannie Mae, but let me see if there's anything else first. Oh, Tesla. You might as well consider Tesla in the same boat as First Solar. So Tesla, the government's got a big bag of money that it likes to throw at companies like Tesla and First Solar, if it's controlled by Democrats. I mean, it is what it is. I'm not trying to be political, right? I'm just saying. So that's how the market will, in my opinion, will interpret it. Unless the only variable with Tesla is like they're under investigation, right? So the day after the election, there could be a headline that Elon Musk is in jail or something, something crazy like that, So even if Democrats win a lot of seats in the House, then that's going to trump any kind of tailwinds from that kind of news. So kind of a wild one. Not kind of. I mean, it is a wild stock. So, anyways, but Tesla's in play. That would be a post-election trade, not something to buy before. Facebook. So Facebook reported earnings tonight. It's stock's at 150 last time I checked. So what's going to happen with Facebook is if Democrats win, I think that increases the odds of laws being enacted that force Facebook to be regulated, which would not be good for their business. That means more compliance, more employees, more lawyers, more red tape. They have to, finagle their way through to run their business. So, yeah. But again, that's another one where it's a post-election situation. I don't think you're going to see a huge gap up or down based on who wins. It'll be something that the market kind of, adapts to that new dynamic after the election, slowly but surely over the course of, days and weeks. All right. All right. So let's talk about. I want to talk about Fannie Mae last. So now let's talk about the weed stocks. So there's four states that are voting on cannabis related stuff next week. Michigan, I believe, is one of them that's voting on recreational use. I think Michigan is the biggest population-wise state that is voting on, that has the issue on the ballot on Tuesday. So what the deal is here is, how do you leverage yourself to take advantage of that? Well, if you look at the popular weed stocks, I'm going to pull them up right now. The first one is Canopy Growth, Canadian, right? Tilray, Canadian, right? So with that being the case, these stocks are probably not going to catch a bid based on U.S. election results, even if they're all voting in favor of legalizing it, right? Because these companies sell to Canadians, right? Well, there is a way to play it actually, because Constellation Brands, which they sell mostly alcohol, the stock's really taking a beating. They sell alcohol, but they're also heavily invested in Canopy Growth, and I think basically they're going to be probably the #1 kind of dope dealer for cannabis in the U.S. They're gearing up for that. They got a new CEO that just took the reins, and that new CEO, from what I've read, is more apt to go down the road of taking an active role in distributing marijuana under legal guidelines, of course. All right, so STZ is setting up for a real nice trade here. Maybe, guys, maybe stay on your toes, because I may be sending you an alert to maybe enter one of these companies, stock or options, before the election for kind of a pre-election bounce. I think we're starting to see that in the overall markets anyways. So be on your toes for that, okay? Now, you might look at Constellation Brands and say, oh man, that thing's $200 a share. Well, I understand that. You can play call options for a big gain, or you can also look at MedMen Enterprises. So what's happening with MedMen Enterprises is that this is a lot of people don't know about this stock, but this is actually a U.S.-based company. Now, for some reason, their stock trades in Canada, but this is a U.S.-based company with dispensaries in like California and some of those other states out west where it's legal, Colorado. So this is kind of a sleeper pick here. A lot of people don't know about this one, but it's out there. And I think this one's going to have a nice rally into the election. And if not, then just after it'll pop, in my opinion. All right. So it's down here underneath the 50-day moving average, right? So anytime you can get a strong stock under the 50-day moving average, a lot of times it's a good idea. So, I'm going to be starting to build a position in this on weakness going into the election. All right. Because this is a US-based MJ play. All right. So pretty exciting stuff. I mean, I can see this maybe not getting back to 750 or 770. What is this right up here? Okay, the high was 700 or $7.57. I can see it getting back to $6, maybe 625, 650. That's a pretty nice gain from 450s under $5, right? So I can see that happening. I can see a nice bounce higher. I hate to sound too overconfident, but I'm almost sure of it. My gut is telling me that anyways. So pretty exciting stuff with the MMM or MMNFF. I can't stand these tickers that are all consonants, guys. It's like I get them it mixes my brain up so much. Like it looks like Russian or something. I don't know. Like I need to see a vowel in there. Okay, I'd like to buy a vowel. But anyways, any questions about these? The ticker is MMNFF. Is the ticker for MedMen, US-based MJ Co. I expect a rally soon, even before election day. So this will be one of the ones where I'm going to start to get in before the election. Okay, guys? Maybe we can make so much money on MMNFF next few days, and then we can sell, and then we can just risk our profit on GLD Strangle. How's that sound? That'd be cool. So pretty exciting stuff, these elections. So if people are just looking at it from the political standpoint, they're really missing out. Okay, so let's talk about Fannie Mae and Freddie Mac. So Fannie Mae You guys may have heard me speak about this recently as well, but Fannie Mae and Freddie Mac are government-owned companies that make a ton of money. And FNMAS is the preferred shares. That's the one I like the most, but I have a small position in both of them now, and I may add to that. And I think what's going to happen here is I don't expect like a sharp bounce like I do in MMNFF before the election, but I think we might see one because traders and investors that want to good speculative speculative bet. This is probably the best speculative bet in the market, and it has been now for a while. It hasn't paid off very well, unless you got in right after the election in 2016. So check out the chart. This is the election 2016 right here, this weekly candle. And you can see it went from, $4 to $11. Sold off the beginning of 2017 and has kind of, consolidated since then. But it's right, these are the preferred shares. This is probably the best play, guys, because when they do privatize it, I think it's going to be privatized by the end of 2020. And I think what's going to happen is from after the election, investors are going to start realizing that the clock is ticking. Steve Mnuchin, the Treasury Secretary, has basically promised to privatize these. He hasn't followed through on it yet because of the political consequences. Because the political consequences of privatizing these companies is that it gives people in the Democratic Party an easy. It makes Mnuchin and Trump a punching bag, okay? Because then they can say they're giving a gift to the rich, right? So they're not going to do it until after the election. But after the election, I think we're going to see some developments. If it doesn't happen through Congress, it could happen by Steve Mnuchin just doing it on his own. And there's a good chance he might wait until the end of his term in 2020, even if Trump gets reelected, to do it. I think that's a fair possibility. But at the same time, with the election out of the way, the midterms, he could do it at any point in the next 2 years. Okay. So, and guys, when it starts to happen, it's going to be, you're going to have to chase, and nobody likes to have to chase anything, right? So, I mean, look at it now. I mean, if you look at the weekly chart, this thing is basically right on a great, great, great support level in the mid to low fives. Okay. So if you make a ton of money on it, just attribute that to the fact that you got in when people kind of forgot about it, because nobody's really talking about Fannie Mae right now, except for like the diehard guys on Seeking Alpha that write about it, right? So you got to buy it when nobody else wants it, basically, because there will be a time. It might be next week. It might be, next August when people start getting excited about these again. But it's going to happen. It's going to happen. All right. So in my mind, the reason I see it as an election play is because the clock starts ticking after this election. There's nothing left to hinder the administration from doing something to privatize these companies. So Steve Mnuchin, I mean, it is pretty much a gift to Wall Street, but also to guys and gals like us. So hey, there's nothing wrong with that, right? There's shareholders that need to make money. So help us out, Steve. All right. Any questions about Fannie Mae? Again, the ticker for the preferred shares has the S on the end, guys. See the S? Because what might happen when they privatize is they might try to make it, just to make it seem like, the shareholders aren't, getting over on the government or whatever. They might cancel out the common stock. I hate to say that, but it's true. Might happen. So if that happens, you want to be in preferred stock because that's not going to get canceled out. All right. Okay, moving right along. Is there any questions on Fannie Mae? This is is it an OTC? Yeah, it is. Yeah, it's OTC. You can use any broker to buy OTC, can't you? I mean, I'm trying to think which ones you can't. I mean, I can buy it through my IRA, but I just have to, they make me like get a text message on my phone to verify that I really want to buy it when I buy an OTC. That's I have Merrill Lynch for my IRA, so that's what I have to do. But Interactive Brokers and E-Trade, it's no problem to buy. Maybe some of the more stodgy ones, like what is it called, ING Direct or something like that, you may not be able to buy OTCs. But E-Trade, Ameritrade, Scottrade, Interactive Brokers, all those, you should be able to buy it. All right. All right, Mike says for the GLD trade, will there be enough buyers to sell the close on the second leg if it doesn't recover? The market makers set the bid, and so it's basically going to be based off of a computer model. There are probabilities of them, of the ETF hitting the strike price of the remaining leg. The answer is there will be buyers if there's a bid. The question is, if we make a ton of money on one of the, say if it goes up a lot, we make enough money on the calls, and say we don't get the boomerang effect that I've been telling you about. If we don't get the boomerang effect, that's fine, as long as we make enough money on the winning leg. Okay. Yeah, I know it's hard to imagine like seeing options in your account that are worthless and being okay with it. But you just have to trust me. I mean, once you go through one of the strangles, if it works out, you don't have a care in the world about them, those worthless options, guys. Okay. It's all about because it's all about the balance. It's all about your account growing, right? That's the bottom line. So, yep. Oh, also SMG is kind of a sleeper play for the MJ sector, for a weed sector. Scott's Miracle-Gro. It's another one that's got hammered this year. Nice reversal today, so that's in play too. It's kind of a pick and shovel type play for the weed growers. All right. So that's 3 US MJ plays that are in play for the election. Not something I'm going to, well, I am going to start buying MM and FF probably tomorrow, and I'll let you know when I do and alert that to you. But I don't know that I'm going to buy calls on SMG and STZ tomorrow. Maybe. And I'll let you know, right? That's why you guys are here, because you want to know. But I'll let you know. But this is why I'm doing the class, because I want to let you know, like, okay, like lay the groundwork so you're not taken by surprise when you see the trailer. Like, what was he talking about SMG calls for? Why do I care about Scott's Miracle-Gro? Well, now you know, right? It's this pick and shovel play for the weed sector. All right. What else here is in my notes? Oh, okay. The bonus, right? So everyone here tonight qualifies for the bonus. The bonus is Iran is coming out with not Iran. We're coming out with the sanctions on Iran for their oil. How much oil they can ship out and whatnot. And those are set to be unveiled on November 4th, which is what? Let me look at my calendar. I think it's Monday, right? Oh, okay, it's Sunday. So I'm going to I need to do a little bit more research on that and see exactly when those sanctions come out. But that may be a situation where we can do a strangle on the XLE ETF based on the Iran sanctions, okay? Because it could be a big move one way or the other due to the perceived impact of less oil coming off the market from Iran, or more oil coming off the market from Iran, depending on what the sanctions say. So the sanctions are coming. The market just doesn't know how bad they're going to be. So there probably will be a reaction to oil markets. All right. Same concept there with a strangler straddle. All right. And I'll have more info for you guys on Friday on that, if I see it still as a viable trade. 10-4. Okay. All right. Now, what I had a lot of fun with on election night in 2016 was watching the futures, because the markets are closed. You can't trade an option if you tried. Can't buy stock. Everything's closed. Only thing you can do is buy Bitcoin. And the problem is it's exciting, and you want to know what's happening because the markets are moving, but the only thing that's open is the futures. So let me show you guys, if you don't know how to do this already. Let me show you. All right, so if you go to FinViz, you go to futures right here. See how I'm clicking right here, futures. All right, so then I'll go to indices right here, or indices, however you say it. All right, and I'll probably click on S&P 500. And then I'll go to 5-minute chart and see how you can see what's happened since the close here based on the future. So the markets are actually up a little bit since the close. 4 p.m.'s right here at 26.82 or something like that. And then right now at 10 o'clock at night, the futures are at 26.90. So that's kind of a fun way to track things. Now for our purposes of our GLD trade, I would go to metals, click on gold, and go to the 5-minute chart, and then that way I can see what gold is doing throughout the night. All right? Because I know we're all going to be watching their screens on election night, wondering what's going on with commodity prices. Okay, the MMNFF tongue twister stock, I will be buying the stock. There isn't. I don't believe there is options for that one. So I'll be buying the stock. I'll be going in probably 2 different tranches. So I'll buy shares tomorrow, and then I might buy another tranche on Friday. Something like that, or Thursday. All right. So guys, that pretty much lays the groundwork for the election trades. Some of them are pre-election, like MMNFF. I may buy some calls maybe on STZ or SMG pre-election too. And some are going to be placed right on election day, like the GLD strangle. And then some will be closed right away after the election. I might hold some of the other ones for a few days after the election, maybe even a couple weeks. So you guys will be updated all along for the entire voyage. I don't think we're in store for any 600% gains like I had in 2016, but I would like to be proven wrong about that. But I don't expect to see that. Frederick said there was a great strangle opportunity on gun manufacturers in the 2016 election. If Hillary won, guns would tank. If Trump won, then the gun makers would be safe from regulation for a while. Yeah, that's a great idea, Frederick. I'm gonna look into that. Great thinking, Frederick. Okay, so Frederick, I'm going to give you a shout out if I research that and I think it's something that could work on a strangle trade. I'll give you a public shout out in the emails for that one. Okay, but I'll look into it, and sure, if it looks like enough of a reaction is likely to happen, I'll trade it as a strangle. The only thing about that what you said is sometimes the reverse happens. Like if you remember the I don't even like talking about it because it's such a horrible thing, but the mass shootings that happen typically after the mass shootings, the gun stocks go up, especially during Obama's 8 years, because everybody's like, oh crap, they're going to come for our guns, and so we better go buy. So the market anticipates how people are getting anxious, and people are starting to think to themselves, I'm not going to be able to buy an assault rifle if I don't go buy one now. So they go out and buy one, and the stocks go to the moon. So I think in Smith and Wesson stock, it was a 50% move after the Orlando nightclub shooting in like 2 weeks, 2 or 3 weeks. So pretty crazy stuff. But I will add that to my notes, Frederick. Good thinking, my good man. Okay, gun stocks. Binary reaction. All right. Okay, any other questions? And I'll let you guys go to bed. You know what? I got that book too, Frederick. Great ideas like that from Peter Navarro's book, It's Raining in Brazil by Starbucks. Also good opportunity when Mad Cow Scares Hit by Pilgrim's Pride. Okay, cool. I actually got that book for free when I opened a Zecco account. Anybody remember Zecco? They sent it to me in the mail for free. Another good book to read, if you guys are interested in like learning how things that are happening in kind of like the real world, I suppose, that haven't been reflected in stock prices yet, is the book by Chris Camillo. I forget the name of it, but he was saying how he made a ton of money on Lionsgate stock because he realized how huge the Hunger Games movie was going to be when they took it from a book to a movie, and so he said he crushed it on that. But yeah, pretty interesting stuff. All right, guys. Well, you'll be hearing from me in the next 24 to 48 hours when I start to build these a couple of these U.S.-based marijuana stock positions, whether it's common stock or call options. I'll let you know either way. Okay. So with MMNFF, though, it'll definitely be the stock, though. It will not be call options with that one. The ones that will be call options would be SMG and STZ. Excuse me. Okie doke. All right, guys. Well, I'll be in touch soon. Thanks for coming. Great interaction tonight from all of you. Great questions, and I hope I cleared up any kind of misunderstandings or things that weren't clear. And looking forward to it, man. I want to crush this election. I want to think and crush it, and I think we'll come out ahead when it's all said and done here in a week or two. All right, guys. Have a good night. I'll be in touch soon.